We start off with Elon Moy and the stimulus shocker that sank stocks. Elon.
Melissa, the president announced this on Twitter, saying that he had made a generous offer, but that House Speaker Nancy Pelosi was not negotiating in good faith. He wrote, "I have instructed my representatives to stop negotiating until after the election, when immediately after I win, we will pass a major stimulus bill that focuses on hardworking Americans and small businesses." Now, Trump had a call with the Treasury Secretary and the top Republicans in the House and the Senate earlier this afternoon to talk about another COVID relief package. Mnuchin and Pelosi were supposed to get on the phone after that was over to sort of hash out the details of a deal. Clearly, that has now been upended. Democrats found out about this on Twitter, just like everybody else. Pelosi was actually in the middle of a call with her caucus when it came out. And I'm told that privately, she responded by questioning the president's mental health and suggesting that the medications he is on could be impairing his thinking. Now, publicly, what she said was that once again, President Trump has showed his true colors, putting himself first at the expense of the country with the full complicity of the GOP members of Congress. Melissa, Pelosi and Mnuchin did have that phone call at 3:30 this afternoon, but it was short, and Mnuchin just confirmed that the president is closing the door on a deal. Back over to you.
Is there any thinking, Elon, that the president is calculating that the Democrats will collapse and give in on key issues?
I don't think that is where Pelosi is going to be headed,
yeah.
But clearly Democrats are regrouping, and we'll see how they respond with legislation or additional bills going forward.
Okay. Elon, thank you. Elon Moy with the shocker out of D.C. this afternoon. And, of course, that had an immediate impact on stocks. We saw the stocks immediately reverse. Guy, Brian Kelly, let's give him some credit here. I think he was the only one on this desk who actually said that is the biggest risk to the market, and he can totally see that happening. And here we are.
I'm glad you mentioned that, Mel, because I was going to absolutely bring up Brian Kelly. And he's right. I do look, it doesn't matter what I think, but, one of the things I've said for a while is I think President Trump will use this to his advantage. He wins either way. I do think it's some sort of political ploy. I'm not certain how he thinks it's going to play out, but if he forces the Democrats' hand, that's a sort of a feather in his cap. And if he says, the obstructionist Democrats, they won't push it through, wait, vote for me, I'll get a stimulus bill, you'll get everything you want in my second term, first year, that works for him as well. So I think it's some sort of calculated move because he understands, in my opinion, the ramifications to the stock market. With all that said, I think the VIX at 28 had been trying to tell you something for a while. This 33.95 level in the S&P 500 we've talked about is a pivot level, and I think we're going to continue to vacillate around it.
This is happening on the same day, of course, that Jerome Powell, Fed chair, has made perhaps the strongest appeal to date for Congress to get their act together and pass some sort of stimulus, saying that a recovery will move faster and be, much stronger should there be fiscal along with monetary policy working hand in hand together, Jeff Mills. So what do you make of this? Even if it's a short-term impact on the market here, the market's going to look through this and think, oh, this is some sort of political theater going on, and ultimately there will still be a deal? Or do we have to put some sort of discount into the market here, assuming that there is no stimulus at all coming?
Yeah, I'm not so sure. I think the market still believes we're going to get stimulus at some point. It's just a matter of when, and I think the timing really matters for this whole rotation trade that we're talking about. The trading today was a little bit unusual because you did see yield sell off, you saw banks sell off, but small caps outperform, value outperform. But I think looking past just today, you're going to need investors to believe that we have this durable economic recovery to really sustainably rotate into value. And I think about the labor market and Powell's comments today saying the unemployment rate's probably closer to 11%. Permanently unemployed continues to rise. If you look at spending and income data in August, spending up but income down because savings were drawn down. So that's obviously not sustainable. So the question is, are these cracks that still exist in the foundation going to be filled by additional stimulus, or are they going to be let to heal on their own? Because I think if it's the latter, then that rotation probably takes a lot longer. And the sixth try now that we're going through to rotate from growth to value probably fails until we have more clarity there.
Yeah. Dan, what's your take on the action today?
Well, yeah, I think yesterday was pretty interesting. I know that there was a lot of commentary about why we had such a sharp rally higher. I know that some of the polls showing that a Biden lead was expanding, and then the potential for a Senate flip makes it less likely that we would have a contested election, and therefore we would have an easier path to future stimulus. You know, again, the window is getting very short when you think about where lawmakers are going to be over the next few weeks about passing some new stimulus. I don't think this works to the president's favor in the next few weeks either. But to Jeff's point, really important, last week, when you look at those continuing claims, when you look at the disappointment in the non-farm payrolls on Friday, and you think about how much time has elapsed since we've had this expanded unemployment benefits, you start to say to yourself, the consumer is hurting, and the consumer who's on the bottom part of that K and the K recovery, and that's the consumer that we need to help right now. So to me, I actually think it puts off the recovery. I think the point about 11% unemployment, we've been talking about structurally high unemployment. That is the thing that fiscal stimulus is going to have to attack in the new year or once this election is over. So to me, I think the market should be a little hesitant here because it's going to take a little bit longer. This will slow the recovery, and that will impact corporate earnings.
So Main Street doesn't get any help at this point, Tim. Let's sort of follow the trajectory out in terms of the impact. Businesses perhaps may face more bankruptcies in this meantime without getting any sort of help. Consumers may further pull back spending. I mean, how do we play this out in the market in terms of sectors?
Well, you got a chance to see today, you know, when the market kind of came unchained, where the impact of loss of stimulus and what that means. So which sectors, you saw it specifically in the energy sector, which over the last couple of days had gotten some sense that you're really getting a deal done. You could certainly have seen it in banks and the reflection upon the yield curve, as has been discussed. But ultimately, I think we have seen some rotation into value, and that is the transports that have been running for a long time, and I think even some of the industrials. I think you know, while the market really wants politicians to finish what they started, I think you have a case here where you're going to get stimulus at some point. You are going to get it after the election. You are going to get an infrastructure bill. So for the market to completely dislocate at this point, I just don't see it happening. And again, if you look at mega cap tech, you can make an argument that despite the strength over the last couple of days, today's very poor close, you have a case where a lot of that leadership is still struggling and you know, is not necessarily going to get you the answer. Certainly with the news out of Washington, which I know we're going to discuss, I think the parts of the market that have been outperforming over the last 3 to 4 weeks are going to continue to outperform.
I have a question, though, and I'm raising my hand, which I typically do when we're all together on set at the NASDAQ market site, but you guys can't see me, so I'm telling you that I'm raising my hand with this question. And Guy, I will direct this question straight to you, and that is for the assumption that we will get stimulus at some point after the election. Is that after the election? That's sometime in January? That's sometime in February? And what happens in the months now when consumers are not getting any sort of supplemental help and they're out of work, and perhaps there are more furloughs becoming permanent layoffs as industries decide, you know what, we can't go on like this?
Yeah, you don't paint a particularly rosy picture, and I think the powers that be sort of understand that. I think they're also willing to play that game. I don't know what it means for the consumer that Dan talked about. Clearly, it's not good, but this, to me, is all about setting up for the election. How can this administration paint themselves in the most favorable way and be potentially the knight in shining armor that saves the day in the weeks coming up to the election, which, by the way, we're right in the midst of. So I think this was calculated. Maybe I'm completely wrong. Maybe it was just a fly-by-night decision just to pull this out of a fit of rage. But I also think that President Trump understands that the stock market is his gauge, and I think he's very aware of the fact that his tweet today was deleterious, and I think he's going to come back with something over the next couple of weeks. That's just my view.
Go, Dan.
Bad take, man. Bad take. I mean, I don't understand when you're losing this badly and you're the president of the United States trying to get reelected, how not throwing a lifeline to the most vulnerable citizens in our country in the middle of the worst health crisis in 100 years, the middle of the worst economic crisis in 100 years. I just don't understand how that works to his political benefit. Come vote for me and I'll give you the help you need in a few months. People, there's 20 million Americans that are out of work, and it's growing each week if you look at those continuing claims. So to me, this is bad politics. The Republicans in the Senate never wanted to do any of these sorts of fiscal stimulus deals, and I don't really think the president has his wits about him at the moment. So at the end of the day, it's really a very, it's like an act of political terrorism that's going on this week, in my opinion.
Well, listen, and I totally get it, and I can understand why you would think that. And I would push back and say I really do believe he's trying to force the other side's hand, and he's going to try to emerge victorious. And you've seen him do it before, where he says, "Look what I've done for you. My steadfast resolve got you a better deal theoretically. Vote for me, and we have 4 more years of winning." I'm not suggesting it's right or wrong. I just think that's how this is going to play out, which is why I think that, it's not as negative for the market as today's action suggests.
Tim, with your hand raised, go ahead.
Yeah, well, rather than call out, I've politely raised my hand and waited here. Doesn't this kind of remind you of trade war? Doesn't this kind of remind you of the wall of worry that we kept climbing? To me, ultimately, bad news, negative headlines have always led to the market moving higher, and I think this is another setup. I really do. I think you've got a case here, and Dan is describing a political analysis, and Guy is on some level, assessing what the president has done in the past. It's probably left him nothing but an opportunity to win. I just see this as setting up a lot of anxiety and a case where the market climbs the wall of worry. We've been doing this for 2 years, and yes, we have had a chance to see just where stimulus is really going to be most focused as market participants. And I think investors need to keep an eye on those trades, because I wouldn't get too far away from them, because whether we get it now or we get it in the future, I would argue those trades were already working.
Shepard Smith here. Thanks for watching CNBC on YouTube.